Okay. All right. Let's have a real conversation. Let's put this up. This is going to be our office here today for this heart to heart that I want to have with you guys. Bring this down. Look at that.
Now I told myself, and I've dedicated myself to the pursuit of Forex psychology. And the reason why I've dedicated myself to the pursuit of this goal and this endeavor is not only to make myself a better trader, not only to make myself a better brother, you understand, a better family member, a better husband, even though I'm not married, a better man in an overall sense. I realized that Forex psychology is heavily correlated to your real life. So I don't know about any other content that you come across on the internet, but I have not come across the content that has told me this. And this is why I realized that I think I might be the one that is definitely appointed to bring this series to you, Forex psychology and motivation, lifestyle motivation. I realized that Forex is very heavily correlated to your real life because in essence, when you conquer the Forex markets, when you conquer yourself on the charts, because you're not going to conquer the charts. You understand? You are not going to conquer the charts. You are going to conquer yourself and your execution on the charts. Because it's you clicking the buy and it's you clicking the sell button. It's not the markets moving against or moving throughout your accounts by itself. It's you doing it. So the psychological variable inside of your Forex trading plan, your Forex trading psychology is you. Forex is 80% psychology. Trading is 80% psychology. Regardless of if you're trading Forex, regardless of if you're doing stocks, regardless of if you're doing futures, whatever instrument you're taking part in, you have to realize that what you're sitting in front of every single day, or whatever day it is that you log onto your MT4 or log onto your web platform or whatever platform that you're using to trade or to access whatever instrument that you're partaking on this endeavor and this journey to flow with, to align with, because that is exactly what you're trying to do. You are essentially trying to set up a probability within the parameters of your trade plan where it is most likely for you to achieve profit. You're trying to set up this scenario on your charts. You understand? So that it is most likely for you to come out profit. I didn't say it's most likely for you to win or lose. I said it's most likely for you to come out in a profit, because it's still possible that you can lose and still come out at a profit. You understand? Winning and losing, being profitable and being non-profitable, these are different areas and different arenas that we have to think about in terms of our psychology. We have to try to really realize how the time plays heavily, how the time is correlated into what exactly is happening on the charts. We have to be quick enough inside of our mind, inside of our psychology, to not click the buy and sell button, but to be quick enough to try to dissect what is happening in front of us, because the markets is a fast-paced environment. The markets is, in fact, the fastest-paced environment that I've seen and ever encountered and experienced in my whole life. Even people waking up in the morning, early morning, I don't know if you guys can recall or are familiar with this, whether it's in traffic or whether it's going to take the public transit, and it's just a rush in the morning. It is consolidated. It is very tight. It is very hard to maneuver and get around because everybody's trying to do everything at the same time. Everybody's trying to get somewhere at the same time. So if you try to relate that to the markets, see I'm saying that early morning, high volume, but congested at the same time experience, how is it that you're navigating through that? You understand? What does that feel like? It's very stimulating. It's very, you know what I'm saying, over the top stimulating. It's almost very stressful. And I think that's what the market environment is like from time to time. You understand? So I have my specific strategy that I'm still working on. You understand? And I'm trying on a daily basis, on a weekly, on a monthly basis to refine my edge in my strategy. So I'm saying to myself, I want to do what everybody else isn't doing. You understand? I want to build a robust strategy and approach where I'm technically doing what everybody else isn't doing. You understand? Because if I do the same thing as everybody else, I might end up on the psychological levels of everybody else. So in the market, you have to try your very, very best to discover your own personal edge within your own system. You have to try your very, very best to identify your own personal flaws. What is it that is flawing your edge? Where is the flaws? You understand?
20 cents, that's 7,300. 7,200. I sold $1, that's 2,700. I bought $1, that's a Gino. I bought $2, and that's 6 bills. Majority of the story is you have to do it yourself to try it. You know what I mean? Like, you have to take risks. So I just thank my guy, like, literally. I just thank Jman. Jman is the only person that I know that's really in the field for 7 years or 8 years, and I'm just 9 months strong. Oh, you thought it was finished? I'm not done yet. And I have this one too, you guys.
The amazing thing about Forex trading is that you can back test. The amazing thing about Forex trading is that you can see your results. I would recommend, honestly, live trading. You understand? And live trading and recording your live trades if you can, or following up with it in some way, shape, or format so that you can see what is it that you're doing, so that you can watch yourself back. I realize that a lot of these successful traders that are popping up now, these are people that are live trading and that are documenting their thought process onto the charts and re-watching it after. You can imagine if you did this 100 times, that is 100 different variables. That is 100 different variables that you're understanding outside of yourself, outside of your memory, that you can recall back on at any time. You can recall back on this content at any time. And this is what's going to help you to constantly redefine your edge. Right now, what's happening is I'm sitting in front of my vision board and I'm looking at a certain target, a certain projection that I have within myself. And then around that projection, I have every kind of way that my life should go based on that projection. So I've basically geared my entire life around one projection, one TP. You understand? One overall TP, take profit. And I want to base my life based off of that. And I want to do this in such a way. And right now we're talking about having a vision board here. You understand? Something that you can see every single day, something that you can look at, something that you can drown your mind in every single day. And what I want you to do is when you have this TP, you understand? This TP, this initial, it could be a monthly target, it could be a daily target. But obviously if you have a daily target, you have a monthly target, because all you have to do is multiply your daily target to get your monthly target. So I'd recommend doing a monthly target and breaking it down to the exact dollar amount, like what needs to be done day in, day out. You understand? What needs to be done day in, day out. And then what you're going to do is you're going to create a lifestyle around that in a visionary capacity. You know what I mean? You're going to take your imaginary capacity and you're going to create a vision around that. What does your life look like? What are all the things that are achieved in your life? What does your trading look like? You understand? What does your approach look like? What does your setup look like? What does your scalability look like? Where are you starting from? Where are you going? Where do you see yourself or anticipate yourself going based on the markets providing you these opportunities? This is Forex psychology right now. You understand? For me, like, what does your credit score look like? You understand? You have to look at all elements of your life, and you have to quantum leap and put yourself forward in a frame of mind and saying to yourself, in this frame of mind, what does my realistic life look like if I'm able to follow my trading plan, if I'm able to hone in on Forex psychology, if I'm able to hone in on my edge? What does my life look like? Where can I go from there, from that point, from that TP? And be relentless in making that TP your goal. Making it your purpose, in fact. Because you see what I realized about having a purpose, and we're talking about outside the Forex markets right now. When you have a purpose, you're driven. You understand? You're not chasing, you're driven. You're gravitating towards. Gravitate towards a good edge based on whatever strategy that you have right now that is most likely going to provide you with the most profitable session approach when you're trading. Gravitate towards that TP that you set out for yourself and realize what it takes within your risk management system to ensure that you get there in the most safest and most mechanical way possible.
So we're going to talk about 5 things in psychology which I think are very important as a new trader, because a lot of times when you're new, you're going to win, you know, the first week, the first month. We have our own, like, you know, someone who works with us in the office. He started winning and, you know, like, he's still doing good, but a point comes where your overconfidence in those, I would say, like, accidental wins, it gets so high you think that you're never going to lose. So the first thing that we're going to talk about is basically it's going to be FOMO, fear of missing out. It basically happens when you're looking at a chart and price is moving. Let's say gold, right? Let's say gold, you want to look for a buy opportunity, but then you see that candles are just printing. They're just moving bullish one after the other, and it's like you know, it's moving with so much ferocity and with so much volume that the chart kind of, like, you know, starts to go up, right? Like when there's so much volume, the chart just keeps on moving up and up. So you look at that and then you're like, okay, you know what? Should I enter a trade at this point, or should I just wait for some sort of retracement? Now, that thinking, when you're looking at the chart, you see price moving, that thinking, when you start to think, okay, man, I should enter now, that's fear of missing out. Because you have to respect yourself as a trader to say, okay, you know what? If I have missed this move, where could I have had an entry? And 99% of the chance is that you're going to say, okay, like, you know, my entry should have been right here at the bottom where the move started, right? Not when the move is already running and you want to take a buy. And if you do win, you're going to think this is going to happen over and over again. But in the same way, you're going to be basically axing yourself in the foot, because most times there's going to be some sort of retracement. So whenever you feel like you're missing out on an opportunity, whether it's pound yen, pound USD, gold, and whether it's price just pumping bullish or just dropping bearish, just wait. Just wait for some sort of retracement. That's all what you got to do. Because, you know, I understand when you've been losing and you see price moving, you want to enter in that trade and make that quick win, make that quick buck. Man, like, making quick bucks will never work. Like a lot of you watching right now, you've been through this so many times, you know. So whenever there's fear of missing out, just say, okay, you know what? I'm going to calm down. I respect myself as a trader. I've missed the move. That's fine. I'm going to wait for the retracement, and then we're going to go from there.
He knows charts, as if knowing about chart analysis was some kind of novelty back then. But it was, because back then, 21 years ago, the trading platforms had no charts. When I worked at City Index, there were no charts. So there I was on board this executive coach, and I was being introduced as the person who knew about chart analysis. The first person that just sit down in front of me was a gentleman who owned a string of pharmacies up in north of England. And he said to me, could you please analyze this chart here? And I looked at it, or I remember it, and it was a company called Marconi. Now, what's interesting about Marconi was that it had been a bit of a darling in the FTSE 100 index, but it had fallen from grace from a price of about £12, 1,200 pence, down to, at this point when I spoke to this gentleman, was trading around 300 pence. The story of Marconi, actually, eventually it went bust, it went to zero. Now, but what's interesting here was that this gentleman had bought a little bit when it had retracted off the highs, because he was thinking it was getting quite cheap. And then he added to his position down here, and then he added to the position down here and here and here and here, because as he said, this has got to be the cheapest company I've ever come across. And at the time I wasn't able to formulate my opinion as I was later, but essentially it was the first time I ever came across an individual who was not trading or investing on the merit of what he was seeing in the market, but what he was actually believing. And he had the misguided notion that a stock that had fallen a lot in price was cheap. But as I said at the time, I wasn't able to verbalize what I know to be true today. It was to be a few years before I got my next lesson about mass psychology. It was the It was a study that I've spoken about many times by now from Rodriguez from FXCM, who, together with his staff at FXCM, had analyzed 25,000 of their clients' behavior over a 15-month period, where they executed 43 million trades in FX. Now, what was interesting about it was that the outcome of this actually revealed that their clients were very good at identifying winning, so we say trading setups. But the problem that they had was that when they won, well, they won decent, but they lost a whole lot more than they won. And so even though they had a very high success rate on their profitable trades, overall they were net losers. Now at that point, I had been exposed to the behavior of the clients of City Index, and I've become acutely aware how frequent it was that people would be betting against the trend on any given day. So for example, if the Dow was marching up the page, clients would like to sell short. And if it was falling, you could be absolutely certain that they would want to try and buy the Dow. And sort of armed with that knowledge, I began a journey of, shall we say, self-discovery. I also became much more mindful of what it was that the brokers all over the world were doing to their clients. So for example, any given broker, this is from Pepperstone's web seminar section of their educational, on their educational area. When you look at it, it's all about how to read candle charts, how to identify trading opportunities, how to figure out gaps and slippage, and how you can day trade Forex. And whilst there's absolutely a place for this, there is a place for, shall we say, learning about the basics of trading. It seems now that we seem to have proverbially put the cart before the horse, and all the focus is now on technical analysis as if this is going to make us better. So I became much more mindful of that. Even though brokers meant well and educators meant well, all their focus was on the wrong thing. This is not new. I mean, this goes back, this chart here is from 90 years ago, and this is from a course that a gentleman called W.D. Gann sold. And back then, I think it cost the equivalent of the annual salary of a typical worker. And there's so many lines and so many dates, and he sold his courses through the narrative of America that to some extent was religious. He sold his courses on the premise that he had found a code in the Bible. And what's so puzzling is that even now, many, many years later, you still have people who rave on about how great Gann is and how much money they are able or could make from knowing about fractals of 8ths and 2/8 and 5/8, and the moon has gone retrograde Mercury and Venus is up Uranus and so forth. And it's actually frightening that there are still people able to sell this bullshit, but they are, because it is appealing to a part of our brain that goes, well, if it sounds complicated, it must be worthwhile learning about. Now, when you look at how far we have come over the last 20 years from when I started trading, it is mind-boggling how much more advantageous it is today compared to, say, 25 years ago. When we day traded the Dow 25 years ago, we were paying an 8-point spread in the Dow. That meant that if you bought the Dow, it had to move 8 points in your favor before you were at break even. So spreads have come down significantly. Knowledge sharing, like what we're doing in Telegram right now, is at an all-time high. It's never been so readily available. Markets are practically trading at your disposal 24 hours a day. You have charts on your mobile phones. Historical backtesting is available to us. And through, we have never been as informed about trading as we are today. Yet when all that is said and done, we're still operating with a failure rate of around 76 to 80%. And as I jokingly said, if that was a dentist school that had a 76% failure rate, you would have to question the teacher's methodologies. Yet, and say this was a school where you're contemplating sending your daughter or your son. 1 second. Okay. And so if this was a school where you're contemplating sending your child, your boy, your girl, and they had a failure rate around in the 70s and 80s, you wouldn't send them there. You go, no, there has to be another way. And what I am proposing is, what is the other way? Because if normal thinking and normal behavior doesn't lead to profitable trading, the obvious question begs, what does? So I wrote a book, as you know, which isn't a book about technical analysis, but it's all about how we as traders go about trading, which is the wrong way around. So here's a little audience question time. how important is the right mindset in trading? And this was a question that Steve Ward asked at the symposium early on this year. And it was an interesting question because people sort of started to chip up. Well, I think successful trading is 90% strategy and 10% mindset. And other people were saying, well, it's important to have the right strategy, but it's also important to be able to follow the strategy. And that comes down to mindset. So by general consensus, we sort of landed at the 75%. That's how important mindset is. And so if mindset is so truly important and we can't actually make our way to profit through the use of techniques alone, then it does beg the question, well, why is everyone focusing on technique? See, most trading techniques will at best have a 65% chance of success, so a little more than a coin flip chance of 50-50. But if that's the case, why do 90% of people lose? 90% of people don't lose on a coin flip game. So when you travel the internet and you frequent yourself with bulletin boards and newsletters and the likes, you will be subjected to the how of trading. How do I use a moving average? How do I use candlesticks? How do I trade the Dow? How do I trade the DAX, the FTSE, and so forth? All the focus is on techniques. It could be product knowledge. It could be knowledge about money management, etc., which are all important things. There's absolutely no focus on what are you going to do when you're just about to self-sabotage for the umpteenth time. How do I deal with not taking the trades when I fundamentally know I should be taking them? How do I take a loss when I simply can't get myself to do it? How do I execute a trade that I know I really should be executing? And so what I wanted this web seminar to be about, and the one in London, is why do we focus all our mental energy on strategies and entries, when in reality, you should spend time on analyzing your psychological weaknesses. What's your weak game? So the foundation of successful trading to me is technique. There has to be a foundation of it called technique. But once you've mastered that technique, of course you can improve, but I think it's much more important that you actually begin to learn about your weaknesses, which come down to your behavior and your process. So I argue that getting to know yourself makes you a better trader. It makes you a better person, but also makes you a better trader. I'll give you an example of this. So here's the FTSE, and we are seeing a market rallying, but right down here, where the laser pointer is right now, we are witnessing the market has made a low below the highest bar of the day. So the highest bar of the day is this bar that we're seeing here, and we have now closed below the low of the highest bar. And especially when this is in the context of a double top, this is a reliable sell signal. So I'm selling short right here in the FTSE. And, it is what it is. Maybe it'll go well, maybe it won't. And then what happens is that the market then makes a push above, at which point I'm going, oh, this is not looking good. But then it comes all the way back down again, at which point I'm thinking, it's all good. It's going to go back down to the lows again. But then what happens over the subsequent bars? Actually, let me just pause for a second because I think this is important. So what you're seeing here is Rafa Nadal and Roger Federer headed out to center court for one of their epic battles. It could have been the one in 2007, could have been the one in 2008, but it's not actually those two I want you to look at. What I want you to look at is this. See, this is a quote from an author called Rudy Kipling, and the poem is called If. If you can meet with triumph and disaster and treat those two impostors just the same, then you shall be a success, if you can do that. He wrote it to his son or sons. And what I took away from that is what he was trying to tell his sons is, go through life with a degree of humility. Don't be too excited when you win, and don't get too despondent when you lose, because those are just emotions, and those emotions are just like a candle in the wind. It's not sustainable. But what is sustainable is how you go about your daily life and your process. And so the imposter of success, or triumph as he calls it, disaster, well, they're just emotions, but they will detract you from the real journey, which is the journey of being able to follow a process. So when we move on to this, and we see here that the FTSE over the ensuing two bars are making a high above that candle, which we saw here, I am beginning to think I'm not in the right position, and I get stopped out. And I get stopped out here above the highest high of the day. Okay, tough luck, another trade, but that's not quite how I see it. The way I see it is, what can I learn from this? Is there a lesson that I have missed here? Should I have done something different? So when I highlight what's going over here, up here, what I pay close attention to is this candle here. This long candle here, because the market had closed below the low of the highest bar, which to me was a sell signal. Then we get a push higher, which goes all the way back down here. And in my book, this market should have continued lower, but it didn't. Instead, it rallied. And I began to go through the days and the weeks and the months and the years before that, going, hey, is this something that happens frequently? Because if it is, I want to know about it. This is something that I want to learn from. You know, learning from failure is something that very few people engage in. But my role model is a gentleman called Kobe Bryant. I am in awe of Kobe, and rest in peace. When Kobe Bryant died earlier, he was the attention of many journalists all over the world. And they were talking about how an amazing basketball player he was for the Lakers. They were talking about all the records that he broke, how many times he made the NBA, etc., etc. But it took a journalist from the Guardian newspaper called Andy Bull, and he was talking about a different vantage. He was addressing Kobe Bryant from a different vantage point. He was addressing it from his failure rate. See, it turned out that Kobe Bryant, he racked up 14,481 missed shots during his career, well over more than 1,000 than the second player on the list. And so the journalist concluded that actually Bryant's success story began with working to conquer the fear of failure. You see, on this previous trade that I just executed, it was so easy just to dismiss it as, oh, well, nothing to learn. It was just another losing trade. But I saw it differently. And I believe that that's a mindset thing, that much of our progress as a species and as individuals comes from our setbacks, that we learn from our setbacks. Therefore, our relationship with setbacks is highly correlated with our position in the food chain, both in society and within the hierarchy of our work, within the hierarchy of employment, maybe on our social status. Do we treat setbacks as just that, a step back with no lesson? Or do we learn what is needed to be learned? If anything, did we appear a little wiser the next time a similar situation appears? So when I look at this setup here, as benign as it may appear to you, it actually turns out that this is something that happened quite frequently. Market closed below prior bar's low, and it looked as if, oh, it's going to fail here, and then it marched higher. Right? I got a market that is close to closing below prior bar's low. It looks as if we're headed lower, and boom, high again. Market makes a retracement of 3 or 4 bars, closes below prior bar's low, and up here, it looks as if market is headed back down again because we got to push higher, and then we close it all the way down, and yet the market somehow managed to find the strength. And so I began to think, no, there's something I need to learn here. And I went through years and years of this particular pattern, just looking for this particular pattern, so that I may be 100% prepared for it the next time it was to happen. And then, just to use a couple of more examples of this. And then something really interesting happened. I was trading the FTSE in an evening not long ago, here in November. And I executed 2 trades in the FTSE at £300 a point at 7,362. Now, what's interesting about it was that it looked to me as if the market is double top, trending lower, and this is just a retracement. But then what occurred to me was, as I had executed the trade, it occurred to me, hang on, what is this thing that I'm seeing right here? And it turns out that that's the exact same pattern that I had done so much research on, and it just slipped under the radar. And I saw it, and I go, wow, I shouldn't be short here at all. I should be long. This is a mistake to be short here. Had I not done those hundreds of hours of research in this pattern, that lesson may have slipped me. But instead, I took my loss, lost about £4,500, £5,000, and it was in the trade for only 3 minutes or so. And then I very quickly reversed long. Now I know what you're thinking, saying, yeah, anybody can say that. So I'd like to prove it to you. Here's my track record. Here's the trades. AC, I'm trading, this is 70, buying it, 300, another 300, another 300, another 300, another 200. So I'm about £1,200 a point. Now, not all of the trades are held all the way, but eventually the market did grind up, and the best trades were the one that I executed near the highs of the day. I didn't make back everything that I'd lost, but I made 90% back what I lost. And I came out of that trading session thinking, thank you, Kobe Bryant. Thank you for teaching the lesson of setbacks. Because had I not been inspired by you, and had I not done the work on this particular pattern because I was annoyed that I'd lost back then, I would never have gotten a lesson. And I hadn't gotten a lesson, well, I may have been inclined to hold on to this trade a lot longer than I should. But I didn't. I took the loss. I moved on. And while this is not entirely a success story in that sense that I made everything back, well, I made most of it back. And that to me seems like a victory. And also an enforcement, a reinforcement of the right kind of behavior. So the solution, as I call it, part 1, is review and discover. Review your old trades, because in there lies an acre of diamonds invaluable lessons for you to learn from. But it leads me something different. It leads me something to the next point, and that is it even possible to practice trading, what I call deliberate practice? And it turns out that I have found a way, and I'd like to discuss that with you. The person you're seeing over here to the left, lady, could you shut the fuck up? Someone's trying to work, or you're yip-yapping away. Be respectful. This person that you're seeing here is a gentleman called Malcolm Gladwell. He wrote a book called Outlier. Yeah, fuck off. He wrote a book called Outlier. And Outlier suggested that if we do something for 10,000 hours, we are going to be experts. It's essentially the difference between average performers and high performers is that they have practiced a whole lot longer than the average performers. And I read that and I probably swallowed it hook, line, and sinker. But there was something about it that didn't resonate with me. And I based that on my own driving. I have been driving for, 30 years. And then I was invited on my birthday to a race course where I put myself into one of those performance cars. I think it was a Mercedes-Benz GT S version. And I had a driver. Basically said, do this, do that. So I was driving. And I realized that while I think of myself as a pretty good driver as I'm racing down the motorway, the Autobahn, actually, that's not driving. That's just cruising straight ahead. If you want to improve, you really got to give your mind a challenge to solve, because the challenge for a mind is not there if you're just doing what you always do. And it reminds me of, let me just go to this one here. I was watching Wimbledon a while ago, and there was a commentator who was passing comment on one of the tennis players. And he said, practice makes perfect. And then Tim Henman, who's a bit of a legend within the English trading, the English tennis community, he said, no, practice does not make perfect. Practice makes permanent. What does make perfect is perfect practice, which was something Vince Lombardi was out. And he's an American football coach who gained an incredible notoriety for his performance and what he was able to bring out in his players. So we go back to Malcolm Gladwell, and the gentleman to the right of Malcolm Gladwell is actually the architect of the research. And his name is Anders Ericsson. He's a Swedish researcher who works at an American university. He was the original proponent of the 10,000 hour rule. But as he stated in an interview, look, I never said that if you practice something for 10,000 hours, you become an expert. What you need to do is you need to create what I call deliberate practice. And the way to create deliberate practice, for example, in the context of trading, is that you set yourself a specific challenge, because your brain is a problem-solving mechanism. And if you just say, I'm just going to study charts, you're not going to learn anything, because your mind is just going to glance over, but it's always glanced over. But if you say to yourself, I am going to find out all the single times that the FTSE makes that pattern that I just showed you, and then I'm going to document it, I'm catalog it, and then the next time you see it, I'm going to trade it. And so what Anders Ericsson basically said was that the people that he had researched, the violinists, the pianists, the athletes, they only become experts because their coaches had set them specific challenging tasks that they had to solve. So it wasn't just a question of doing the same serve over and over. Instead, it was about doing the same serve, trying to land it in a particular challenging part of the court, for example, or that your fingers had to learn a very specific, deliberate sequence to play the violin. That's how you improve, by actually tasking yourself with a very, very specific sort of behavior in order to uncover a new behavior. And what in turn that does is build neural networks. Now, ladies and gentlemen, now perhaps you understand why I like to get my sleep and why I make sure that I exercise and I eat well, because this kind of behavior takes an inordinate amount of energy. Living consciously takes an inordinate amount of energy. And so what Ericsson basically said was, Malcolm Gladwell, you got it wrong. It's not about doing something for 10,000 hours. It's about doing it deliberately and truly, truly challenging yourself. So I have split my training into different categories. And I must admit, I've also split many other things in my life into different kind of categories. So I'll call the first one specific improvement. And so the specific improvement is, say, I feel that I wasn't good at trading trend dating days. So I found all the trend days I could find that happened on a Friday, for example. And I began to make notes on how am I going to trade these on a Friday? How do you actually trade a strongly trending day, especially when it's a positive day, which seemed to be my Achilles? How do you do it? How do you actually go about doing that? Navigating around your fears of being the one that's buying the high tick of the day. And going through these exercises day by day by day, hundreds of them, I was able to actually come up with strategies that enabled to say, you know what, I am going to do this, and the way I'm going to do it is by, fill in the blanks, because I don't want to deprive you of your own research. Let's take another example. Let's take FOMC trading. Not so long ago, we had the FOMC, and I served you an 80-point winner, which took us about a minute and a half, and bang. But what you don't know, that there was hundreds of hours of research gone into that particular sequence of events on that particular day. I had taken every FOMC event that I could find over the last 10 years, and I had meticulously gone through every single one of them, finding out how do you successfully trade FOMC. And I came up with a trading pattern that I call the Rule of 4. Again, I'm not going to deprive you of your own research, but the Rule of 4 has been something that you have been subjected to, probably without even knowing it. You just heard me say, we're shorting the DAX here, or we're shorting the Dow here, or whatever it may be. But going through every single one of these FOMCs, I found a way to successfully navigate this particular and oftentimes very difficult market to trade. That was my mind being tasked with a very specific exercise, being how do you trade FOMC? When you look at the school run, same story. How do you trade the DAX successfully in the morning? And whilst not everything that I do is turned into gold, for example, I chart the S&P 500 against the tide in the Hudson River, which turned out to be an absolute dud. It just does go to show that I set my mind a specific task, and then I went about to solve it. Now, what I also need to remind my brain of is don't be complacent, because you know what? You have a tendency to do the wrong thing at the wrong time. So I need to show my mind, my brain, what can go wrong if I don't excel in the right kind of behavior. So what you're seeing me doing here a while ago, 9 years to be exact, I went long the FTSE at 6,064. And then I bought some more at 56. And the market went down, and then I bought some more at 35, and then I bought again at 25. And then in the end, I closed the whole thing, and I lost £17,000. Do you think that's good trading? I don't. It's awful trading. And that is the point that I need to remind my brain of periodically. Because you have to be the master of your own kingdom, but you also need to acknowledge that your mind has as its core function to enable you to forget pain. It, as its core, it wants to protect you against pain. It means that it will protect you against remembering the losses, because, hey, that's painful. So I am going to do the exact opposite by saying, fuck you, brain. I need you to remember how badly you can act when you're under stress. So don't you ever dare adding to a losing position. But what's the opposite of adding to a losing position? What's the very opposite behavior? It is to add to a winning position. And that's why we're doing it. It is not just that we make more when it's going well. It is also that we are counteracting the very things that our brain has a tendency to do to us. And I don't want that. This is a stupid example. But it goes the same. I bought one of those smartwatches. It only cost me 20 quid because I don't need anything else. But I need to know how quickly can I run 10 kilometers? How quickly can I walk 5 kilometers? Am I improving? Or am I just cruising? So everything in my life that I
Okay, fear of missing out. Next, what I want to talk about is greed when you're over trading to cover losses. Right, Caesar? You got that too? Right? So Caesar is there. So a lot of times what happens is that, let's say, you think price will go bullish. Okay, you're perfect, awesome. Price is going to go up. You take a buy. Now you've executed a buy order, and price starts to retrace. It comes closer to your stop loss. What happens is you're like, okay, you know what? My belief that price will go up is so high. What I'm going to do is I'm going to extend my stop loss, and then I'm going to add another buy, so that now I have 2 buys running, and if price goes up, I'm going to make more money. Right? Then price retraces a little bit more, and then you add another buy at the retracement. Price retraces more, you add another buy at the retracement. How many times have you guys done this? You know, like I've done this too a lot of times. You know, way more times than I can even imagine. Whenever price retraces, I would take a buy, I would extend my stop loss, I'd extend it again. The trade which I would have started off based off of the 4-hour time frame or the 1-hour time frame, now in my head I'm thinking, this is probably now going to be a swing trade. It's based off of the daily, you know. But the main thing is now you've added so many positions to this one trade that your risk is not based on the daily now. Now you have added risk which you never meant to add, only because you thought price was going to go up and you did not manage risk. You kept adding positions. You got to stop doing that. You know, the one thing is that I see kids, when they come to trading, is they always think about, oh, you know what, I'm going to have a mental stop loss, because whenever price is going to come to my area where I'm going to close, I'm going to have a mental stop loss. And your mentality is not mature enough. It's not there for you to really take responsibility for that price to close your trade. You don't. Like a lot of times you don't, you just extend the stop loss. Why the f are you extending it? The more time you're going to extend it, there's the much higher probability you're going to lose. So whenever price goes against you, whether you're in a buy or a sell, and you want to add a position, just stop. Don't add positions. Let it hit the stop loss. Let it hit the stop loss, and then go get some education to see how you can give your trade a second chance, because a lot of times whenever you close the trade, you find out that motherfucker went in your favor after that, right? So now you got to see that, okay, how can I give my trade a second chance so that I could have been in this trade, right? Third thing we're going to talk about is sticking to your trading plan. Now I get around 50, 60 trading plans sent to me every 2-3 days, right? And every trade, let me tell you, a lot of you guys do these massive calculations and you guys have a solid trading plan. It's so amazing. I look at the trading plan and I'm like, man, this guy cannot fail. Even if the world explodes or falls down, this guy's not going to fail, because every trading plan is a solid trading plan for you to make money over time. But a lot of time what happens is that you're going to follow your trading plan for, let's say, a day, the second day, the third day, then the fourth day you're going to take a loss, and then you'll say, okay, no problem, and then you're going to break a rule, and that rule in your trading plan is going to be okay. Now you got to focus on 1 or 2 trades. What you're going to do is you're going to add another trade. Now that loss is going to get bigger. Now look at your progress, it's coming back. Now you take another trade to cover that loss, to bring you to break even. Higher probability is you're going to lose that trade. Now you're coming back again. What's going on? You know, because you have a solid trading plan. If one day doesn't work, that's totally fucking fine. You know, take the next day off, come back the day after, and study your trade. Study your loss. Like a lot of times you guys will follow your trading plan. You will follow 1 or 2 trades a day, and that way you will revise your trades. You're going to go over your trades, but then a day is going to come by where you're going to take 8 trades, 9 trades, 10 trades. Who the f has so much time to go over 10 trades? Who's going to do? You're not going to do that. I'm not going to do that, right? That's why I stick to 1 or 2 trades. You know, so the guys you see who do win consistently, they take 1 or 2 trades a day. You know, and over time when they continue to make money, most of the guys say, oh, these guys are scam. These guys are fraudsters, because they're disciplined, because they're consistent, they're following a trading plan. Doesn't make them, you know, bad, doesn't make them scammers or fraudsters. This means they are committed to their craft and they're committed to their trading plan. You know, so all you losers out there who say, oh, these guys are this and this and that, when you can't even follow your own goddamn trading plan, it doesn't make any sense to talk bad about anyone else. Okay, fourth thing to talk about is not taking profits. This is very important, because a lot of us, we take a trade and price goes in our favor. Okay, awesome, price went in our favor. We have this hypothetical zone where we think price is going to go, and as price is moving up, it's reaching that zone, and you're like, okay, I should take profits, I shouldn't take profits, and then price goes up again, and then boom, starts to retrace all the way down. You know, now most times what happens is sometimes your target is going to get hit, right? But a lot of times your target is not going to get hit, because maybe your target is above some resistance.Maybe your target is some number in your head that you think is going to get there. No, since 2016, I've been an advocate of 10 to 15 to 20 pips. That's all what you need. If you're looking at a pair like gold, really volatile, 15, 20 pips is easy. You're looking at something at pound yen, 15, 20 pips is easy. You're looking at something like, you know, USD yen or Euro yen, 10, 15 pips is easy. You know, that's all what you gotta do, is just compound these pips. You know, don't look for home runs. You wanna look for a fucking home run? Close 90% of your position, secure profits, and let the tiny position go wherever it wants to go, because you gotta build confidence first. Right? You got to build confidence. The more confidence you're going to have in holding positions, the better you're going to be at holding the full position. Because a lot of times you don't secure profits, you make no money, you get stopped out at break even, or you get that supposedly winning trade in a loss because you did not secure. I always secure. Sometimes I secure early, but that's fine. That's totally fine, because at least I'm putting money from the market in my trading account, and then I'm withdrawing that money from the trading account. Like a lot of you guys can't even put your money from the market to a trading account because you think it's going to go to some level in your mind. It just doesn't make any sense. So this brings me to my 5th psychological point. And by the way, this isn't scripted. This is just straight one form recording, which we're doing now. So the next is going to be the last one, not utilizing risk management. What do we mean by not utilizing risk management? Number 1, of course, you got to use stop loss, right? All you guys here in the chat, what's number 2? 1, if you got to use stop loss, what's number 2? What is it? You use stop loss, then what? You got to make sure that you lose less than what you planned on losing. Like a lot of us, what we do is we take a trade, we have a stop loss, and we're like, okay, you know what? We're going to lose 2%. Fine, you lose 2%. You take the next trade, you risk 2%, you lose 2%. Now you're down 4%, right? Now, what do people do when they're trying to manage risk is that if they're risking 2%, they're going to figure out, how can I lose less than 2% if I know this trade will be a losing trade? How are you going to do that? That's the trick. Because you can lose 2% all day, you know, but how can you lose less than 2%? How can you lose 1.5% knowing that this was a bad trade to begin with? That's the secret. And you only get that by reading candles, by looking at candle structure, market structure, because that's where you really got to look at risk management. That's what's going to take you out of a break-even stage. Like a lot of traders, poor traders, man, you guys get stuck in break-even stage for months and years. How are you going to get out of it? By looking at your losses to see how can I reduce my loss. You know, because your winners are the same, your losses are the same, hence you are at break-even. You can't increase your winners, we all know that, but you can decrease your losers. The winners are not in your control, the losers are in your control. Whenever price goes to your stop loss, look at market structure. Like a lot of you guys already know this. Look at market structure and see how can I reduce risk. I took this loss, how could I have reduced risk on this trade? These are very important. You know, all these 5 things we went over for this psychology thing that we had to do now, man, these are very important. And this goes into your life as well, how dedicated, disciplined, committed you are to your own lifestyle, because that's just going to pour into trading. If your trading is a mess, this just shows that your life is a mess. You know, if your life is structured, it's well balanced, then trading automatically will be into that structured, well balanced life, and over time it's going to get better for you. You know, so I wish you guys the best of luck. Hopefully you guys apply these techniques. Very important